Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be talking about some more positive news recently released regarding Tesla stock. And with this one, full disclosure ahead of time, we don't have as many major news pieces as usual. And some of the reason for that is because I've covered some of these news pieces in separate videos, and I don't want to repeat all of that once again for those out there that watch a lot of my videos. But we will provide a quick rundown on some of those news pieces, including today's all-time high share price as well. But with the articles that we'll be discussing today, one of them is about Tesla's growth in the German auto market. A lot of you all may not be surprised about this one, but it's pretty impressive because it is comparing it to the rest of the market, and you can really see the big difference between what Tesla is accomplishing right now compared to the rest of the auto market, and the growth that we're seeing out of Tesla compared to the rest of the auto market. And it really emphasizes this inevitable transition that will occur as the years go on. And it also shows the tremendous foothold that Tesla has in the auto industry as they're continuing to grow while other automakers are starting to shrink. And then in addition to that, we have a news article about a partnership with Tesla. On top of that, we have some discussion of autonomy and the progress that we're seeing with the FSD beta right now. And following along with that FSD topic, we also have some news regarding the pricing for those out there that already have a Tesla but want to upgrade to the full self-driving package, and some news regarding the price changes with that. So as always, of course, please make sure to smash that like button if you enjoy the Tesla videos. But getting right into this one for today, let's take a look at the movement and the share price currently for Tesla. And we actually hit an all-time high today, not only just an all-time high record close, but also an all-time high share price in general. And that leaves us currently at $649.24 per share. And in the normal market hours today, we had a plus 7.13% gain. That was plus $42.72 added onto the share price. And then in the after hours, we are at plus 1.17%, which is plus $7.48 added onto the share price. So a very notable surge in the normal market hours today. And then we already see a little bit of progress in the after hours as well. Keep in mind though, a lot of things could change between now and when the markets actually open, and especially when the normal market hours open up. So after hours aren't always very representative of the next day. Things can change. But some of the reason that I think we saw this movement for today, as addressed in the most recent video that I uploaded before this one, was partly because of this news piece released in which a venture capitalist known as Gene Munster was talking about how he sees Tesla growing 300% and eventually reaching a $2,500 share price in a matter of 3 years. And he added some justification with that regarding Tesla's insurance service, which is of course more vertical integration that we'll likely see worldwide in the future, and especially in the United States. And he talked about the high gross margin revenues of 30 to 40%, in addition to referencing autonomy and HVAC systems as well, which I think HVAC systems would be a perfect addition to the Tesla ecosystem. But like I said, we covered that in a separate video, so you can check that out for yourself. It's on my channel. But I wanted to at least reference that because it was probably one of the biggest news pieces of today. And that's also, I think, partly a reason why we saw some pretty notable growth today. However, a lot of that growth is likely simply due to a lot of institutional investors and retail investors piling on as well before this S&P 500 inclusion. The first major news piece of today is by the Tasmanian and author Eva Fox. So as always, we greatly appreciate this information. And this is actually a really good article because it takes some information from a German source, which can be hard to translate sometimes, and it breaks it down with this article and describes it a little bit further. But as this article title states, it says Tesla is dominating the German auto market and is only car maker with positive year-over-year growth in November. This article continues by stating steady growth in Tesla's Germany sales has led the company to be the only one in the German automotive market to see positive growth in 2020. Compared to the same period in 2019, Tesla managed to record a 37.2% increase year-over-year in registrations. According to KBA data, all other automakers have been crashing for months on end, while the California automaker continues to increase sales month after month. And with this, just taking a look at this chart, the first thing that we notice is one company on this chart in the green. The rest are all completely in the red. Some of them are much more in the red than others, but the notable thing about this is only one of them is in the green, and of course it is Tesla. And this is kind of something where a lot of people would have thought, okay, out of all of the automakers in Germany, especially the ones that began in Germany, who would have thought a foreign automaker to this area would actually be coming in and dominating? And that is the power of Tesla, that's the power of disruptive innovation, and that is the power of this EV transition, where you have a huge advantage starting out as an EV company compared to being a legacy one, in the sense that if you want to engage in this transition, and especially if you want to go go all in, it's going to be very costly. You're going to have to retool all of your old factories. You're going to have to hire new workers, fire old ones. Basically, it's going to cause a mess, and it's going to make your company operations, at least for a while, pretty hectic trying to engage in this transition while also dumping vehicles and equipment either at a loss or either to the point where they're barely making any money on it at all. And this is something that's really difficult to do if you're a legacy automaker, even if you have good intentions, as we've even seen with the CEO of Volkswagen, who clearly knows that electric is the future. Even he has stated that they are 3 years behind Tesla in terms of battery technology, software, and autonomous capabilities, and that's most likely an understatement, and that's coming from someone who clearly wants to transition. So at this point, for the legacy automakers, really the only choice that they have to even have a chance would be to either go all in, just push all of those costs up front and get it out of the way, rip off the band-aid and do what needs to be done, or they have the option of spinning off into another separate company under the umbrella of the larger company, and eventually that separate company could start to gain a bigger position in the market than even their legacy company. Those are a few options, but it's certainly not as ideal as just being a company that began producing EVs and not ICE vehicles. And any startup company that began that way, even if they're years behind Tesla, they still have a major advantage over the legacy automakers, and that's why so many people are saying that a lot of legacy auto will go bankrupt, and I would not be surprised with that, because at this point in time, it's almost too late to turn around even if you go all in, because of how costly it will be and how much time it will take to do that. And we've already seen hints of that, such as like with the Hummer EV and it being $114,000, somewhere around there for the top model, and the most affordable model I don't think will even come out until like 2024. And when you compare that to the goals with Tesla with a Cybertruck, even if it's delayed until 2022, the statistics on that in terms of the value that you're getting for what you're paying, it's just not even comparable. And that comes as someone who actually likes the look of the EV, but if you're buying based on value and the 0 to 60 time and the towing capacity and the software and the autonomous capabilities and the ecosystem support and the battery efficiency and range, then really I think Tesla's the best value there for that. So this is another one of those major pieces that shows the position that Tesla has in the auto market right now, where we clearly see that growth is happening for Tesla on this chart, but not any of these other automakers. They're actually shrinking in comparison to the one company that is beginning to grow and most likely will dominate in the future. Moving on to the next news piece of today, we have an article by Finance Magnates, and this is by author Bilal Jafar or Bilal Hafar. Sorry if I mispronounced that, but we greatly appreciate this information. And this is titled Swissquote announces partnership with Tesla to launch car leasing. And it says the broker teamed up with the American electric car maker to expand its activities in the leasing sector. Providing further details on this, it states Switzerland-based online trading platform Swissquote announced today that it has partnered with the world's largest electric manufacturer Tesla to increase its services in the credit sector. The broker is launching a new digital leasing offering in cooperation with Tesla to help Swiss clients interested in purchasing new cars. According to the press release shared by Finance Magnates, the Switzerland-based financial services company is planning to focus on evolving market trends related to the automotive industry. The broker partnered with Tesla to capture the growing interest of people in electric cars. The Swiss company is now bringing online leasing of Tesla to the clients in order to make the leasing process simple. And then it includes this key point right here, which is the quote, which states, Swissquote is expanding its activities in the credit sector. Leasing is a popular option for the purchase of new cars in Switzerland. Swissquote is focusing on a market trend that is moving decisively towards electric cars, aiming to make financing a Tesla as effortless as driving one. With Swissquote's entry into the leasing market, customers can now benefit from an enhanced digital experience that enables swift processing of their leasing requests. With that news piece right there, we're clearly seeing an effort to make the leasing of Teslas much more efficient and smooth. Nobody wants to deal with something that's a big hassle and very time consuming. So my impression from this is that they're trying to smooth out this process and make it as easy as possible to lease a Tesla, which is always a good thing, especially for those new potential customers that are considering giving Tesla a chance. Next up, we have a video of the full self-driving beta and some of its performance when dealing with actual deer going across the road, and we actually get to see a really nice experiment in the sense of how this would perform in this specific situation. And this is good news for a lot of those out there that live in rural areas and are considering eventually getting a Tesla whenever that will be. And for those out there that are a little bit critical of full self-driving, yes, we are still in its beta stages, but it's pretty impressive to see how it dealt with these deer in this dark environment in this situation. And that's something that I continue to notice with the constant FSD beta updates. It gets better and better and better, and it's honestly really impressive how much better it has gotten gotten in just such a minimal amount of time compared to when that beta was first released. We're seeing so much progress with that. So I'll leave that link down in the description below and also in the top comment as well, because it's a really good video and it also shows how FSD would perform if you had all of the lights off as well, which is really impressive. And speaking of full self-driving, we have an update by Yahoo Finance and Benzinga EV Insights, and this article is titled "Tesla Makes Full Self-Driving More Accessible to Some Customers by Lowering Price." This article states that in the past, Tesla offered an enhanced autopilot purchase option. While it's no longer available, it offered many of the features that the FSD package offers today, and while EAP owners can upgrade to FSD, the cost is even more for them, as they initially paid $5,000 and the upgrade cost was $6,000 for a total of $11,000 for FSD. And then it continues stating, now those EAP owners are on an even ground with everyone else, as Electric reports those owners can now upgrade for $5,000, bringing their total cost to $10,000, the same as anyone else buying a new Tesla today. Although that's a pretty small news piece, it's one of those things that needed to be dealt with, and it's good because it's providing more accessibility for those that wanted to purchase FSD but didn't want to pay over the normal price to get it. So I consider that pretty good news because it's simply more accessibility for those that are considering purchasing FSD, and that was kind of a barrier that may have held people back from purchasing it because they simply didn't want to pay more. Anyways, I just wanted to share a few small news pieces with you all, but as always, of course, please make sure to smash that like button if you enjoyed the video, and also feel free to check out Robinhood and Webull in the description below. Especially with Webull, you can get 4 free stocks in total right now, 2 free stocks valued up to $250 for just signing up with my referral link, and then you can get another 2 valued up to $1,600 for depositing $100 into your Webull account. So there's a lot of nice passive income opportunities with that there, and you can take out that $100 after you get your free stocks. That's what I did, and it worked for me at least, and it helps support the channel, which I greatly appreciate. But anyways, I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.